Our series. My name is Ruth Ann from Tech Canada, and it is my pleasure to moderate these webinars. And I am welcoming all of you on this eve of a long weekend to join us for a bit of a financial update. We are actually looking at finance at the beginning of this long weekend, and then in August 6th, I have Mark Parrott, who's going to be talking about your financial wellness as you go forward. So financial wellness in the future. So we've got financial wellness now, and we have financial wellness in the future. So you can see a bit of a trend as we go through this. I would like to remind everybody to please put your comments and your questions in the question box as we go through this. We do appreciate your interaction, as does the speaker. So our speaker today is Spencer Shein. So when you're analyzing financial data, are you able to comb through the numbers and see what's behind that? Well, the problem is the latter is a lack of evaluation. Can you see the big picture? And that's what Spencer is going to do with us today. So Spencer is an entrepreneur. He's the founder and CEO of Shift Financial Insights, which is an accounting firm in Vancouver, BC, which is beautiful weather today, we heard. And so thank you, Spencer, for joining us today. And I'm going to turn it over to you now, Spencer, to go forward.
Oh, thanks so much, Ruth Ann. I really appreciate being here and appreciate all of you joining us on a Friday or Thursday afternoon, Thursday morning, heading into a long weekend. I'm really also excited and super passionate about this topic, parting the clouds to make financial reporting easy, clear, and accessible for everybody. And one of the reasons I'm passionate about it is actually because of this guy right here. If you don't know who this is Gary Robbins. He's a friend of mine that lives in Vancouver, or North Vancouver, British Columbia. And he's most known for being an ultra marathon runner. And if any of you are into ultra marathons, you may have heard of the Barclays Marathon. It's widely regarded as the toughest foot race on earth. And it's so tough, in fact. So first of all, it's over 100 miles. The cutoff time is 60 hours. You're only allowed 60 hours to finish this race. And the race has been going on for 15 years. Only 40 people compete in it per year, and you have to apply. You have to be a proven ultramarathon runner to even apply for this race. So that's about 900 people have done it. In the 15 years, there have been 18 finishers, 18. In 900 people, only 18 have finished. That's how difficult this race is. In several years, nobody finishes the race. Now, in 2017, Gary ran this race, and he finished. Remember, the cutoff time is 60 hours, 60. He finished in 60 hours and 6 seconds. He missed the cutoff of the toughest foot race in the world by 6 seconds. And this is him right after the finish. And he was absolutely devastated. It was his dream to finish the world's most difficult foot race. And so, of course, the question is, what happened? Why didn't he finish? And well, he was definitely on pace to finish. And ultimately, he ran into some bad weather. He ran into some fog. He got disoriented. You put that on top of the fatigue and everything else. And he lost his way, got lost, ended up having to wade through a creek, was going the wrong direction for a while. And when he finally course corrected, it wasn't soon enough to achieve his goal. So let's now put that in terms of finance, in terms of accounting, in terms of all of our businesses. So we're looking at our financials, and unless we have clear skies, unless we have a clear path, we can get lost in the fog. We can get lost in the clouds, and we can start heading the wrong direction in our business. Now, the difference is Gary missed the cutoff. Well, he goes on with his life, and sadly, he just didn't make his goal. Well, for us in business, if we're going the wrong direction with our business because we don't clearly understand our financials, that can have devastating impact to not only us, but also our employees. So that's why I'm so passionate about this topic. And my goal today is to give you the tools to completely transform and ultimately have really clear information coming out of your financial statement in a way that you may not have seen before. And the other reason I'm excited to be here is I love presenting to tech. Tech is a super interesting group because you've got such different sizes of businesses. There are some real big dogs. I've presented in front of people with 100 million, even billion-dollar businesses. And there's also some smaller businesses, newer businesses, growth businesses who are at very different stages. So this presentation really has relevance for both. If you're one of the big dogs and you're on right now, everything I'm talking about, put in the perspective of individuals or departments, really bring it down to those individuals that may not have access to your more sophisticated accounting and finance departments. And for the smaller businesses, small and medium business, for you guys, this might be directly for you if you're the owner. How do you get the financial information so you can make better decisions for the business? So this is going to apply for everybody. Although for the small and medium business, it's predicated on the basis that you have a solid foundation in your accounting and finance departments. I know a lot of small and medium businesses struggle with that. So if you've got a weak foundation and you're already struggling with the basics of finance and accounting, no problem, stick around, but also send me an email, spencer@shiftfinancial.co. And what I'm going to do, I'm going to actually just drop my email. Oh, I don't think I made that to everybody. Hang on one second. No, I'll do that later. My email is spencer@shiftfinancial.co, not .com, and put the subject line, foundation help. If you're struggling to even just get the basics in place, I have some other resources. I have another talk that I can direct you to online that I've done that might help build your solid foundation. Otherwise, please stay on, but also stay on if you're struggling with foundation, because this might help with that as well. So real quick about me, Ruth Ann mentioned a couple of things. I am a CPA, chartered accountant for the last 20 years, and also a former investment banker. More importantly, I've been a serial entrepreneur for the last 20 years. I've had businesses in construction, cold storage, manufacturing, and now, as Ruth Ann mentioned, financial services. We're an outsourced accounting department. And along the lines of what we're talking about today, we make accounting not suck for entrepreneurs, because I know a lot of entrepreneurs think accounting sucks. I've been a very active member with the Entrepreneurs Organization for about 15 years, so I'm very familiar with the environmental entrepreneurial world. I've been an instructor with the Chartered Professional Accountants of British Columbia. I'm not currently doing that because I'm busy with other things, but have no doubt I'll be back doing that again. I'm very proud that earlier this year, I became a best-selling author of my book, Entreprenumbers. It's really along the spirit and the lines of what we're talking about today. So I'm excited to be able to present and share some of that information with you here. And also on the some people think Spencer's crazy world, I'm a reformed ultra marathoner. I say reformed because I haven't run a marathon for several years, but I've never done the Barclays that I mentioned that Gary did, but I have run over a dozen ultra marathons, Ironman, cycling events. I am one of those crazy people. Today, we are here to talk about how are we going to part the clouds and really create that clarity. We're going to talk about the format in which information is presented, and we're going to talk about how to select the right information. Now, I'm hoping I can draw on somebody that's online to volunteer for me. I need a volunteer for about 1 minute, and somebody I'm looking for here. So if you can put that in the, the questions box. If you can volunteer, don't worry, I'm not going to make fun or embarrass anybody. I just want to give you a personal experience of the difference of how information can be presented in a way that's going to be game changing. And it's really powerful if I can have that. So if somebody can please pop their name in the chat box. And if there's nobody in the chat box yet, I will tell you there's a prize. That's often what gets people over the line. So, and ideally it's somebody who deals with financial information, but really doesn't like dealing with financial statements and that type of thing. Do we have anybody that's put their name in yet?
So I've got
early
one.
On Thursday? Okay.
Yeah, just hang on a second, Yolanda, and I will open your mic.
Thank you so much in advance.
You're self-muted, Yolanda, so you need to, there we go. Okay, you're on.
All right, very good. Hello, hello.
Hi.
Hi, sorry, what was your name?
You can call me Yinan.
Elan? Did I get that right? Elan?
Yeah. Yes.
Okay, very good. Well, thank you for volunteering. So what I'm going to do is I want to show you here. It's very small. I will zoom in, don't worry. This is just an income statement, kind of a standard income statement you would see from a business. And for those of you that may not be quite as familiar or don't see income statements on a regular basis, on the left side, these are all the lines of the income statement, the different categories of revenue and expenses. The next column, Elan, is the current year's results. So how much have we made or lost during this year? The next column is the same time period last year, the exact same thing. So we can compare year over year. And then the last column is what is the change year over year? So are we spending more or less than last year? Okay, does that make sense?
Yes.
Okay. And what we're going to focus on, the exercise I'd like to do with you, okay, is I'm going to zoom in on the expenses, just the expenses. And what the goal I'd like you to do, and I'm only going to give you 10 seconds, so don't worry if you don't finish, okay? If you have a pen and paper handy, that might help as well. I'm going to zoom in, and I want you to tell me what 3 line items have actually had the biggest increase in spending from last year at the same time. Does that make sense as a question?
Yes.
Okay. I'm going to zoom in now. Let me get my timer going here. This is going to be a quick fire question. Oops, pardon me, wrong button. Timer. Okay. 3, 2, 1. I'm zooming in. So I'd like to know what are the top 3 items that have increased spending year over year. Now, there's quite a bit of information on this income statement, so I'm going to roll down as well.
Okay.
Okay, stop. Now, that was a bit unfair, but did you get any information out of that, or did you not have time?
I don't think I have enough time, but just quickly about that one, I thought one is for payroll, increase a lot.
Payroll?
Yeah, payroll. Okay. And another one is rent. I think so. Rent.
Rent. Okay, that's pretty good. You did really well there. Did you get a chance to see how much payroll went up?
I think it's close to 240,000, something like.
Okay, you're actually really good. You did better than I thought. Congratulations. I want to do the exercise exactly the same way again, but I'm going to present the information a little bit differently for you. So your goal is exactly the same. I'm only going to give you 10 seconds. By the way, I gave you 15 seconds last time. And I want you to tell me which 3 line items spent more than last year and about how much it was. Okay, you ready? 1, 2, 3, go.
Okay. This is much better.
Okay, well, you still have time. And stop. Okay, so what was number 1? What did we spend more year over year?
So one is for, I think for payroll increase like 18,000, and the second is rent 40,000. The last one is consultant, I think so, is 20,000.
Okay, so here we go. I'm going to put the slide back up. So wages, you said 180,000, rent about 40,000, consulting about 20,000. You're spot on. Thank you so much. If we were in the room together, I'd make sure everybody gave you a round of applause. And I said there's a prize. I'm going to send you, if you send me your email, your mailing address, I'll send you a copy of my book as a thank you for participating.
Okay.
So you can jump back on mute. Feel free to put questions in the question box. But that's the point, is when information's presented in the right format, the clouds part. And with Elan, what we did is, yeah, I gave her 15 seconds. She actually did really well to get a couple, but didn't quite have enough time. But presented in a different format, it was instant. She was done. Actually, you were kind of laughing at about 4 or 5 seconds saying, yeah, I kind of got it. Like it's all right there. So how do we now take this information out of our financials and make it that easy so all of the relevant information we need is that simple and intuitive to get to. So I mentioned before, we're going to look at format. So how can we present information in a way that makes sense? I'm going to show you a few pictures, and I want you to I'm going to give you like 3 or 4 seconds per picture to just in your own mind, what's going on in these pictures. All right. So I imagine for all of you, you ended up with a story of what's going on. The first one was, looked like a guy maybe wearing a suit, chasing money blindly, never getting it, and heading towards the grave. You built this story out of it. Each of those 4 photos, and the last one is just one I've always thought was quite funny. But the point being is, much like that exercise we did with Ilan, the entire story is told very quickly, and you don't need anything other than the photo. A picture's worth 1,000 words. And so when I talk about format, it's really talking about data visualization. How do we take the financial information and put it into a visualized format to make it simple and intuitive to understand? Here's a couple examples. Net income. If we're going to track your net income, yellow line is this line. Green line is last year. Sorry, yellow line is this year. Green line is last year. The gray line is budget. It's super easy and intuitive to see that we're doing way better this year on the yellow line than either budget or last year. There's no big set of financials. You don't have to go to multiple places to find it. It's all in one place. And so line charts are a super effective way to tell stories. So they're good for trends over time, like the one I just showed you, where you can instantly see the improvement year over year. Line charts are also really great for relationships. So this is where I took what is labor as a percent of sales. And what you can see is over time, labor as a percent of sales is growing. That's a problem. You don't have to be an accountant. You don't have to have knowledge of how to read financial statements in order to know that your labor is going the wrong way. The other thing line charts are really powerful for is indexing. And by indexing, I mean, how are things trending from a point in time? So what you can see, if we take revenue and we start at 2015, we can see how is our revenue relative to 2015. This is good if you're ever trying to sell a business, or you want to see, you pick a point in time and say, how are we performing since we made that initiative or since we instituted that strategy? So line charts are good for that. And of course, you'll notice in 2021 and 2022, where it's projections, it's always off the charts good. So that's one thing that line charts are super powerful for. We've also got pie charts. Here's a pie chart of accounts receivable. How do you think we're doing? If this is your company, how are we doing collecting our receivables? Well, I see that automatically slightly less than half of our receivables are current, and slightly over half of our receivables are overdue. Half of our receivables are overdue. That means my money is in other people's pockets. I'm not happy with that. And it's instant and quick. So pie charts are really good for any time you want to take proportional data to make it 100%. So accounts receivable we just looked at. Let's also look at overhead costs. So if you want to see, okay, well, we've got a problem with our overhead and we want to see where we can save money. When you look at a pie chart like this, you can see between admin wages, rent, travel, supplies, and maybe legal, that's the majority of what you're spending it on. And you'll notice you can't even really read those smallest pies. And I'm okay with that because I don't really care about the really small pies. If we're up for trying to save money, we're going to have to do it because admin, rent, travel, supplies, legal, that looks to be about 85% of our costs. And almost always in business, the 80-20 rule applies somehow. 80% of your revenue comes from 20% of your customers. 80% of your costs come from 20% of your expenses. So these charts are really good at extracting that and really shoving it in your face, and you don't get bogged down in the financials, the way they're presented by accountants. Bar charts, another good opportunity. This is exactly the chart we used before in our with our volunteer. And bar charts are particularly good if you want to rank order data. So which ones are worse compared to budget? It's obvious. It's not only obvious that it's the biggest, but it's obvious that it's the biggest on a relative value. It's also, and as a heads up, what you'll note is, of course, I've used red, color red, to make it appear bad. It's also good for comparative data. Here's just like a random example. A call center of all the calls we got in. How many were inquiries? How many did we get bookings? How many did we send call outs? How many complaints? Red versus green. What's good? What's bad? So using the data visualization is super powerful. Now, I've given you some examples of how to use which different types of charts, but there are no hard and fast rules. This chart, which I showed you before, presented a different way, is this. Now, the way my brain works, I really struggle with this chart here. And I've seen lots of companies use charts like these. And I just, there's too many bars. I don't know what I'm looking at. Whereas I find this chart really simple, beautiful, and easy. But some of you may find this has more data in it. So there's not necessarily a right and wrong. The goal here is that whoever the user of the financial information is needs to be able to see it and immediately interpret what's going on intuitively without getting hung up on things. So pick whatever format of the chart you want. By the way, I'm not a huge fan of stacked bars. I find those can be challenging. I'd rather use a pie than a stacked bar. So play with different formats, get your accountants, get your finance people when they're presenting you financial information, or when they're presenting information to different people at different levels in the organization, get them to try different things and have the users give the feedback, this works or this doesn't. I feel like the clouds have parted, or I still feel like I'm in the fog. You know, part of the problem here is, as an accountant, you know, I went to school for 3 years to learn how to write, create, interpret, and read financial information. For those of you that haven't, you know, it really is a different language. So we need to use a language that makes sense for those of us that aren't trained financially, and that language is pictures. Okay, so now that we have a sense of how to format the financial information in a way that's going to be more usable, different types of charts, you can never have too many, well, you can't have too many charts, but you can always focus on the charts that are most relevant. So we're going to get into the selection. How do we pick what information we should be putting into charts? And my offer to you today is that it's a 4-step thought process. 1, we start with a high-level overview. 2, we then zero down into some company-focused areas. Number 3, we dive into some fairly simple analytics that I'm going to offer you today. And then number 4, how do we build a dashboard? How do we know what items should be on our dashboard? If you're not running with a dashboard, that's going to be a really important section for you. All right, so let's start by talking about the high-level overview. Now, my good friend Archimedes once said, give me a lever long enough and a fulcrum on which to place it, and I shall move the world. Now, let's apply that to business. If you apply leverage to the right part of your business, you're going to be able to move the business. And so that's what all of this reporting we're talking about is, highlighting the elements, the levers of the business that you need to pull to move the world. So this is just a sample P&L that I literally downloaded off the internet. And I don't care how big or how small you are. I don't care what industry you're in. I don't care if you have divisions, departments, stores. I don't care any of that. Everybody on this call, their business has 5 key sections on the income statement. Number 1, of course, is sales, minus your cost of goods, equals your gross profit, and your cost of goods is, of course, your direct cost to deliver your product or service, to build it, execute on it, minus your operating costs, equals your profit, your net profit. Now, from a levers perspective, there's only 3 ways that you can actually improve your profitability of your business. That's either by increasing sales, by increasing price or increasing throughput. 2, decreasing your cost of goods or holding it steady as your sales grow, so it's less as a percent of sales. Or decreasing your operating costs or holding those steady as your sales grow to decrease the overall operating expenses as a percent of sales. Those are the only 3 ways you can improve profitability. So we want to actually apply leverage to one of those 3 areas and get clear on which of those areas have the biggest opportunity for us to pull on. Similarly, on the balance sheet, there's 3 areas called your working capital, your accounts receivable, you can collect faster. We saw in the example before, half of them were overdue. Inventory, I had a manufacturing business for 15 years. Inventory is the silent killer of manufacturing and retail everywhere. This bald spot I have back here, that is absolutely because I had inventory for 15 years. And of course, accounts payable. Now, for which you want to actually slow down payables, not so much that you get in trouble, but the more you're using your supplier's money for your operations, the better for you. Now, for the larger businesses, of course, capital assets and debt are going to be levers you'll have to consider as well. But for a lot of the small and medium businesses, those are the ones. So when it comes to data visualization of those high-level metrics, if you look at the charts here, we start with net income, we go to sales, then our gross margin, then our operating expenses. And we've hit all of the key levers in those 4 charts. By the way, the left side is for the month result, the right side is the year-to-date result. So literally in 8 charts, you have a sense of the high-level performance of your income statement. And once you start to look at this on a monthly basis, it's going to be obvious. Similarly, on the balance sheet, we now have your accounts receivable report, that pie chart we looked at before. There's also the trend of how old your average accounts receivables days are. So you can see that green line this year is badly trending in the right direction. And this is an instance where you can actually merge the technical data, the accounting data with the pictures and actually have the backup. So when you see there's a problem with receivables, you can start to see, oh, this client is overdue by $26K, this client owes us $6K, whatever it is. And the exact same report on accounts payable. The one thing I don't have in here is an inventory report. The case study that I used for the backup for this information was a marketing company. So I don't actually have an inventory turns report, but an inventory turns report would be there. And so now with those very few reports, if you are P&L responsible or you have people that are responsible for elements of the P&L, you now have in literally seconds a high-level overview of the performance of the company. All right, moving on to company focus areas. So a few things to really think about to bring in the next level of charts. Segment profitability. I mentioned the case study was of a marketing company. So as you would imagine in a marketing company, they buy media for their clients. So they'll buy Facebook ads and radio ads and all that kind of thing. Well, unlike selling their own time, the margin on their media purchases is a lot lower. They mark it up. And what you can see is through the month of, that would be June, their average media margin is about 7.56%. So breaking it up, before we were looking at high level, what's the overall margin? Now we're starting to get into the segments of your business. And so I would like to see charts for my business, and I suggest you look at it the same way, is how do I intuitively think about the business in terms of different segments? If you're in marketing, maybe you've got some contractors that you outsource, and maybe you've got contractor revenue versus internal revenue versus media margins. If you're in construction, it's new homes versus renos versus commercial versus tenant improvements. However you intuitively think about your business. If you have a store, you might think about the different segments of the store. Maybe you have fashion, maybe you have jewelry, maybe you have footwear, whatever it is, and actually break down the margin by each of the different. And now you can track and you can see over time, do I have a problem with my margin? Why did I have this big bump here in February? Why am I a little bit lower in June? The point of these charts is to help you ask the right questions. All right, so now we understand our segment profitability. It's really helpful to look at the largest line items. So in this case, we'll look at total labor. For a lot of businesses, labor is the single biggest line item, and often, or the second biggest if there's materials or manufacturing. So with labor in this case being the single largest line item, we're going to track this over time. And interesting, if we have a look here, something happened. The blue line last year, if you notice, it went from November of about 90,000. It jumped up to about 110,000. It dropped to about 75,000. Then it went back up to about 90,000. Something looks funky there. So one of the side benefits of using these charts is again, is asking the question, why do I have this weird spike and dip? Is it an error? Or did something funny happen in my business that I need to correct for the future? And these become super obvious, and the more time you spend with it, the more comfortable you'll get with it, the more those things will stick out like a sore thumb. Just by point, that was before we took on this client, so that was in fact an error in their accounting, and it's pretty obvious that some of the December costs got pushed into January. But it's also possible, you might look at this and say, well, maybe there were some year-end bonuses, and then in January, we were shut down because, you know, we sell Christmas stuff and we're not opening Christmas. So that could be a real answer, but it's pulling the question out. So we've now looked at the largest line. So I take the top 3, 4, or 5 largest line items. And then I would add some other charts, opportunities for improvement. What are the areas that you're strategically focused on that you want to improve in the business? Is it inventory turns? Is it, are you looking specifically to grow a specific segment of the business's revenue? Each one of those, anything that's a strategic focus of the business, I would pull out and create some form of chart on there so I can make it super easy to see how it's going. I'm going to go backwards for 1 second. I apologize. I forgot to say one thing. The whole point of that circle there where it goes up and down and it didn't make sense. Think about how difficult that might be to see if you're just looking at an income statement for 1 month, or you're looking at the year-to-date income statement. You actually have to go a few places to pull that together. Yes, you could see that on a month-by-month income statement, but usually you're not looking at the current month-by-month income statement and last year's. So it's really valuable to have these charts in this format. All right, areas of stress for you. Like if there's something that's stressing you out, if there's something that you want to make better in the business, or that you lose sleep over, or that you have maybe other leaders in the business that you feel you've got some concerns about, or divisions of the business, creating some charts in or around the performance of those areas of stress actually help relieve the stress, because now you actually know what's going on, and there's really no question once it's sitting there in that data visualization. And finally, if there's really volatile line items, if there's line items where it's up and down all over the place every month, again, the point of these charts are to ask questions. So when you're seeing, I've got a problem with this line item, or it's all over the place, start charting it, and the questions will start to become obvious what to ask. So now we've started with the high level overview. We've selected some additional charts we want to look at it to make it more specific to our business. And now we're going to get into some analytics. Now, the bigger companies, of course, you've got sophisticated accounting departments and finance departments running all kinds of analytics. We all know about analysis paralysis. So maybe more targeted to the small and medium businesses, I'm going to suggest these 4 analysis, which are all relatively straightforward, that you should be asking your teams to deliver to you in order to dive down a little bit deeper to identify the key financial issues facing the business. All right, so number 1, the first one I'd like to talk about, and every time I use this word, I get this reaction because everybody gets super excited. And of course, the word is budget. Everybody loves talking about budget. And by the way, I do know some of the smaller businesses, if you have a small business, you may not even have a budget. I understand that. If you don't and you're struggling, you don't know how to do it, shoot me an email. I've got some resources on that as well for you. But for those of you that have a budget, all I'm looking for is something as simple as we did in that exercise I did with the volunteer before, is a top 5 budget variance analysis. Again, back to the 80-20 rule. 80% of your problems are going to be in 20% of your line items. So if you can identify which 5 line items are the worst, you can already see that labor is probably our biggest problem. We're way over budget on labor. We're over budget on travel. We're over budget on marketing. And by the time I got to the last one, which is admin wages, yeah, it's a problem, but it's not a huge problem. So I'd rather focus my energy on my production labor than my admin wages. So that's going to give you a really clear picture of your budget variance without having to hammer through a bunch of heavy reports. The second one is very similar to the budget variance analysis. And this is about trends. We did this again with the volunteer. And I think about the worst trends that have happened over the last 5 years. And I think sort of globally speaking, the worst trends have been man buns, Segways, and Kardashians. To me, none of those did anything for me at any point. So we want to go and root out the man buns, Segways, and Kardashians in your business with another bar chart, very similar to the budget variance analysis, that shows you which 5 items have been worse year over year, which ones where the costs have gone up too high or the revenue has gone down higher than anything else. Now you've got a rank order. At this point in your mind, it's like, I know what's going on against budget, and I know what's going on against prior year. The reason we want to do both of those is because, let's be honest, a budget is wrong the day it's done. So if it was a bad budgeting exercise, you don't want to rely too heavily on that information. Similarly, on the year over year side, if your business is changing rapidly or you had a huge growth, it might be fine that your labor is up by $60,000 if your revenue is up by 200. Like, that's okay. So having both of them, once you look at both of them, if labor shows up on both reports, that now is definitely an indicator that we've got something that we need to look at. All right, moving along. Number 3. And honestly, if there's one thing you take out of this presentation, I'd really like you to focus for this, because I feel it's probably one of the most valuable analyses any company can do. And that's the show me the money analysis. Where do I make my money? Where do I make my money? I guarantee the 80-20 rule exists. It's called a Pareto analysis. So I'm going to start by explaining this chart. Okay, so on the bottom, on the x-axis, this is the number of customers that they have. So they have about 75 customers. Along the y-axis is percent of revenue. So what you'll see is it flattens out around 100 because, of course, we hit 100% revenue and that's it. And interestingly, if you look at 50% of their revenue is generated by about 6 clients? 75% of their revenue is generated by about 17, 18 clients out of 75. 75% of their revenue is generated by 17 clients. And here's the other interesting thing. When you get to about 90%, look at how many clients, nearly half of their clients, nearly half of their energy goes to servicing clients that generate only 10% of their revenue. So this is a great way for most companies, and with the companies we deal with, very few ever look at their numbers this way. And once we do it, we can start to strategically drive the business for how do we get more of those customers on the left side of the chart and fewer of those on the right side of the chart. Do we start to raise our minimums? Do we start to put a threshold? Do we raise prices on those small guys? What do we do? Because when we actually look at the data, you can start to see how profitable these top clients are, like $47,000, $23,000. This is for a month of worth of data. And then you roll down to the bottom, you've got people generating $2,000. Well, if your top clients are generating 40 and your bottom clients are generating 2 worth of profitability, you need 20 clients to generate the same profitability as your top client. So how do we go after those top clients and get rid of those bottom ones? That Pareto analysis is amazing. And the steeper the chart, the more you're reliant on a few clients. So I really encourage everybody to think about this. Now, this one was done on based on clients. Again, think about your own business. It could be based on jobs. If you go out and say do service jobs, you would probably want to rank order your service jobs by most profitable. If you have a high number of transactions, so it's not practical to look at every job or every customer, maybe you can look at the products you're selling and see which products are generating the most revenue. We did this analysis when I had the manufacturing business, and the 80-20 rule applied. I think we had at our peak 500 or 600 finished good products. We only had 80 that were generating the absolute, almost all of our profitability came from those 80 SKUs, and we set strategic initiatives to eliminate those bottom ones because all they're doing is taking time and energy and distracting you from getting more of the top client. All right, number 4. So please, I beg all of you, if you're not doing some sort of Pareto analysis, rank ordering your clients, your products, your jobs, however you look at your business, please, if there's one thing you take away from today, please start doing that. And the 4th one, of course, is labor. Some sort of analysis around labor. This particular one is showing that over a 2-year period, labor has crept up by 3.8% of revenue. Again, you may not see that on a set of financial statements, but you can't avoid seeing it here. There are a bunch of different types of revenue, of a bunch of different types of labor analysis. It could be labor efficiency ratios. There's a whole bunch of different ways of looking at revenue, of labor. Get together with your accounting team, get together with your controller, whoever you have on your team, and figure out which analysis from a labor perspective, because chances are, unless you're one of a very few type of businesses, labor will be your number 1 cost, or at worst, number 2. Always, always, always keeping an eye on labor. It's one of the biggest levers you can put into your business is managing labor properly, and having the information to know exactly what it is a key part of that. All right. And number 4, dashboard. I know there's a lot of businesses that actually struggle to figure out what to put on a dashboard. So I'm going to offer you an exercise that you can go back with your team on to determine what you should put on your dashboard. And I actually think this is a really fun exercise. Now, I also think running 100 miles is fun, so you may disagree, but this actually, if you do kind of quarterly retreats or an annual retreat, this is a great exercise to do with the team on an annual retreat. And this can be at the senior management level or at a divisional or departmental level as well. So you kind of come up with a pretty standard grid, draw it on a piece of paper or on a chalkboard, doesn't matter. And down the left side, put 3 key financial metrics of being revenue, contribution, and profit. Across the top, select some other indicators that are relevant for your business. So it could be employee count, customer count, how many units we produced, how many hours we put into something, how many products we have. And then work your way through the grid. Okay, so employee per revenue per employee, pardon me. Is that a metric that's relevant for our business? Yes or no? Contribution per customer. Is that something we need to be looking at? Profit per unit. How about that? Revenue per product. You're going to get to some where it's like contribution per hour doesn't make sense. Not relevant for our business, or it's not possible to track. So literally work box by box through to figure out from a revenue, contribution, and profit perspective, which items can you put on your financial dashboard? It's a really, really cool exercise and can generate some really interesting conversation, leading to some strategic initiatives as a result. Now, you don't want your dashboard to only be financial metrics, of course. So you can do the same exercise again without them being financial. So rejected units, how many jobs were completed? If you're in online sales, how many abandoned carts do we have? How many cold calls were initiated? If you're trying to drive sales, you could put units down the left, complaints down the left, growth down the left. You can now start to think about your business. What are the types of things we do? Who do we serve? And how do we actually put them into a matrix? So, for example, maybe how many units we produced versus how many rejected units could be a huge metric for us. What's our reject rate? And we track that over time. How about cold calls initiated versus revenue growth? That might be an interesting metric. There is no shortage, like the dashboard, the upside and the downside of the dashboard is there's no, here's your dashboard. At the same time, there's no limit to what you can do. And yeah, you probably know the rule. You don't want to have more than 5 or 6 key dashboard metrics at the high company level, but then divisions, departments, they can have their own set of metrics as well. So this is a super interesting exercise to come up with what you think the top 3, 4, 5, 6, maybe 7 if you're a bigger company, metrics are at the high level. Go through this exercise, play with it for a while. If it's not giving you relevant data, cool. Do the exercise again and come up with what the next metric is. But don't get stuck, don't get caught thinking that there is a fixed dashboard you should have. Each company is going to need its own dashboard based on its own needs, and the dashboard will evolve over time. You don't want to be changing your dashboard every year, of course, but you don't want it stagnant for 10 years. So maybe a new metric is going to be rolling in and rolling out kind of every year or two. So there's going to be an update or change based on the strategic initiatives. And then because we're talking about format, we don't want to forget that when we go to present our dashboard, of course, we present it in chart form. So if you want to see revenue per employee, how are we doing over time? Rather than numbers on a board, sometimes they see a dashboard where literally they write it on a whiteboard every day. Now we can see how are we doing revenue with employee. We've been working on it for the last, 9, 10, 11 months, and it's heading the right way. We had a dip in May, but overall we're heading the right way. So with that in mind, I just want to summarize some of the things we've talked about here. Key takeaways from this. Number 1, a picture's worth 1,000 words. I'm hoping I've demonstrated that when you're looking at the data, presented in a way that's obvious, it jumps out. You can't get it wrong. Number 2, figuring out the right style of chart. Work with your accounting team, work with your finance team to figure out which charts. Try it. Try a line, a bar, and a pie. Put it in front of somebody and say, what do you notice? If people keep gravitating to the line, use the line. If they like the bar, use the bar. Don't get fixated on it has to be this kind. Get fixated on it's obvious and immediate when somebody looks at it. Of course, we all know colors to express good and bad. That's a no-brainer. Selecting the right data. So that's part of the dashboard. That's part of working through the exercise of starting at a high level and then drilling down from there. Remember, we went high level, company specific, analytics on the company, and the dashboard. So think of it as a bit of a funnel. Thank you very much. That's a summary on how to create clarity, how to remove the clouds over your financial information. We've got a little bit of time. If anybody does have questions, I'm happy to take them. And feel free to reach out if you do have questions, comments, thoughts, anything I can do different or better for you. My why is I believe entrepreneurs can change the world, and my job is to help them through their financial blind spot. If I didn't accomplish that for you today, please send me a note. Let me know what I could do differently or better going forward so that I can help the next group do that.
Thank you very much, Spencer. A question has come in from Julia. She wants to, first of all, thank you about the clarity on charts. The charts are amazing. Her question is, for small businesses without a large accounting department, what tools are available to help build charts?
Yeah, excellent. So you're welcome to reach out to me directly and we can have that conversation. So there's a couple of options. So depending on what accounting software you're on, if you throw that in the chat box, I can do it. But if you're on like a QuickBooks Online or a Xero, if you're a smaller business, if you go to the website, the marketplace, I believe it's called, the App Store for QuickBooks and Xero, there are actually data visualization tools that exist that are out there. Now, we built our own, so it's hard for me to comment on them because I don't use them. So we've actually automated all of the production of these dashboard metrics. We have software engineers on staff. So you can either do that, and then there's a bit of an old-fashioned way, and this is a bit painful. There's always Excel, and once you build the templates, there's a cut and paste to put it in to get the latest and greatest charts. I would avoid that if you can, especially with limited resource, and I'd look for either give me a shout and I can point you in the right direction, or go to the QuickBooks, Xero, whatever accounting software you're on. As long as it's cloud-based, there will be some sort of data analytics tool that will help you put it in chart form.
Thank you, Spencer. A question I had, and I think that this was a really good point about making sure that your dashboards are not static, that you kind of evolve those. And because again, you might have blind spots in your business, and those dashboards and changing it up every now and then might illuminate or create more questions. What are some ways in which people might think about how they can kind of shake it up to find out what they don't know?
Yeah, it's a great question. I'll answer that sort of two ways. I'm going to start with, if you don't have a dashboard right now, I'm going to offer 5 places to start with a dashboard. And I'm going to do this from memory. I don't have slides in front of me. So number 1 is revenue growth. What is our revenue growth over time? Number 2 is an operational metric of some sort. So some way to measure the efficiency of the operations. Be that unit, if you're in production, units per hour. If you're a service company, how many service calls you did per day, or what's your average service call time. A measure of quality. So something to make sure that what you're either delivering as a service or product is meeting the quality expectations. So that could be reject rate. That could be callbacks for service updating. Customer satisfaction, of course, net promoter score is the most popular. We all see that all the time when you're you're using some sort of software, and the pop-up box come up on saying a scale of 1 to 10, how likely are you to recommend XYZ product? That's net promoter score. So tracking how happy are your customers over time. And then the 5th one is a pipeline metric, and a sales pipeline. So how does my future look for sales? So now if you know your sales are good, your operations are good, your customers are happy, you're growing, and you've got a good pipeline, that's a great place to start. And so that's the first part of the answer. The second part of the answer I think about is when you're in those meetings where you're looking at those metrics, some are going to burn a little brighter, and some are going to be things that everybody ignores. And so that's a great clue to be like, why are we never talking about this one? It's either not relevant or it's too hard to measure. There's something that's not quite right about it. So the ones that are burning the brightest. So I'll give you an example of our dashboard. We call it second dates. And to me, that means if somebody is interested in being a prospect, we have an initial call with them. If we book a follow-up call with them, we call that second dates. That one we look at literally every week, and we focus on that. That's like a primary, one of our key metrics. And then I'm trying to think of one that died out. So when I launched the book, I was doing quite a bit of appearances. I was on podcasts and some radio shows, that type of thing. And we were tracking that. Well, the book's been out for several months now. It's kind of got its own traction. So we're not tracking that anymore because that's not as bright anymore. Like, when you launch a book, there's more excitement about it. It's harder to generate PR around a book that's been out for 6 or 8 months. So that one, we stopped looking at it. It wasn't quite as relevant. We weren't getting the results. So that one we let burn out. And so coming back to that matrix and being like, okay, what did we miss? Or what did we put in the parking lot that we thought might be okay, but we didn't actually execute? So that's how I would kind of keep refreshing that every, again, be looking at it. I'm a fan of quarterly strategic meetings where we look at the strategic initiatives of the company and the dashboard. So I'd be looking at that quarterly and definitely annually. Are these metrics the right ones? I wouldn't be messing with it more than that.
Wonderful, thank you. And we're going to finish off with a question from our volunteer, Yilan. She's come in and she's asked about budget. She's never done a budget before. Can you explain the benefit of a budget? She has a mid-sized company that focuses on ice cream in the ice cream industry, and she is trying to look at increasing sales. So how can she use the budget to do that?
You know, I'm not totally convinced that a budget is going to help drive sales. The purpose of a budget is really to set a plan for the year and be an indicator, are we tracking to the plan? So, you know, if and I don't know, round numbers, you sell $1 million worth of ice cream and the goal is to sell 2 million next year. If that's the budget, you can track, are we on track or not? But if your goal is to drive sales, I would be more inclined to focus on the dashboard side, where what are the initiatives that are going to help you drive more revenue of ice cream sales, other than letting me know, because I will probably consume some. What are the initiatives that are going to do it? So that comes back to, is it cold calls? Is it second dates that once you've talked to a buyer, you need to have a second conversation? What are the activities? So now you want to measure the activities, not the result. Measuring sales is the result. Measuring the activities of cold calls, of second dates, of, we do campaigns where we'll actually send out, a marketing campaign and a card to people that we want to do business with. So we would measure how many campaigns we send out. So I'd be really focused on that in terms of driving revenue growth and really measuring the activities that drive the revenue growth. From the budget side, I'm a huge believer in the budget because it's a great indicator, and it also, you can use that to have your managers hold them accountable. So if you've never done a budget before, here's kind of what I would suggest doing. There's 5 steps to driving a budget if you've never done one. Number 1, you do have to provide your accountant with a revenue forecast. You also have to provide your accountant with any changes that are going to happen in the business. So, we're hiring new staff. We're opening a new store. We're moving the head office. Whatever big changes are going to happen in the business over the next year, you need to provide that to them. Then you send them away to come back with a version 1 of the budget. They're going to take the changes you said from last year, plus a trend of what happened last year to build version 1. You actually seem quite sophisticated when we did that exercise at the beginning. But if, for those of you listening, aren't sophisticated, the way you would deal with that at that point is smile and say, great job, consider the budget done. And then have them put it into the accounting software. Now, of course, if you are comfortable, you can say version 2, version 3, version 4. Until you're happy, then put it in the accounting software. The reason it's okay if you're uncomfortable with the budget, as long as you get those charts going we've talked about today, and you start looking every month and you see your budget versus actual going completely different directions, and you start asking the question, why? What's going to happen is your accounting team is going to recognize you're serious about this, and both you and them will naturally get better at understanding how to do the next budget better. Whether you rebudget because the first one was a disaster, that's up to you, or you wait till next year. The purpose of starting a budget is just to institute the discipline of learning how to use it so that you can then get the benefits once you've started to tweak it down. So a little bit of a long-winded answer, hopefully got that answer that you were looking for. But if you're specifically targeting revenue growth, measuring the activities that support revenue growth is going to be more impactful than a budget, but still have a budget.
That's fantastic. We've got about 1 minute left, Spencer. Could you hold up your book again? And I just want to let everybody know, because there was a few people that wanted to know about the name of your book. So just keep it held up there for a second. And I want everyone to know that the recording of this presentation will be available on the Tech Canada website. And also Spencer is a Tech Canada speaker. So for those of you who are members, please poke your chair and say, hey, I'd like to have Spencer come and do a presentation with our group. And for those of you chairs out there, we would love to have you have Spencer speak for your groups as well. Thank you again, Spencer. I said it at the beginning before we got online. I love how you provide such clarity and you break things down into really digestible chunks. As a math illiterate, I always enjoy, I never get bored listening to you. So thank you again.
Thank you
Take
so
care,
much. I
everybody.
appreciate it. Thanks everyone for your time. Have a great long weekend.
You bet. Everybody enjoy some sunshine.